Bismillahirrahmanirrahim. Assalamu alaikum. Dear friend and student, welcome to MR Circle. I am Rehman and I am here to teach you financial management. Today we are going to discuss that what is primary market and what is secondary market. In this lecture we will discuss the difference between primary market and secondary market. So let's start it. First of all, we have primary market. What is primary market? In simple words, a primary market is a place where the new securities is traded for the first times. Or we can say that when a new corporation, a new companies want to sell his shares, his securities, his equities, his debt to investors, to raise money, to raise funds. When a corporation have no resources but they have shares, securities, and when they want to increase their funds, want to raise their monies, they sell their shares, their securities and a market. When they share these securities for the first time, they sell it on primary market. While secondary market is a place where the securities are traded for the second times. Or we can say that when the securities of a corporation which is purchased by investor is further sold to another investors or sell to another trader. Or we can say that when it's purchased by second times. Secondary market is a place where the securities of a company is traded by investors. Investor means that when an investor purchases the securities of a corporation for the first time, then he wants to sell these securities to raise his financial resources, his finance, then they sell it to another investor. And this trade is done on secondary markets. And primary market, securities are created. Securities are created means that when a corporation is established and they have no other choice but they have their securities, their shares, and they want to raise their funds, so they issue securities, and by this way in primary markets they issue their security to investors, and the securities of that corporation is created for the first times. While in secondary markets securities are already exist. Securities are already exist mean that in secondary markets we define it that in secondary markets the securities is traded for the second time. So it means that these securities of a corporation is already exist with investors, and the investor further want to sell it to another investment. So the securities is and on secondary market is already exist with investors. And primary market, the trade is occur between corporation and investors. It means that when a corporation sells his securities to investor, the dealing is occur between the corporations, the firm, and the investors. The other investor is not involved in the primary market. In primary markets, only the corporations and investor are dealing with each other, because the securities, the shares are traded for the first times, and the shares is of the corporation shares. So the corporation share, so they will sell it, not anyone. They will sell it to investors. So the dealing is occur between investors and corporations. While in secondary markets, the trade occur between investor and investors. It means that in secondary markets, the trade, the shares, the dealing is occur between investor and investor, because one investor have already the shares of a corporation. So when he want to raise his fund, when he want to convert the securities of a corporation into cash and to liquidity, they want to sell it to another investor, they want to sell it to another trader. So the investor find another investor for the shares, for the securities of a corporation. So in secondary markets, the dealing is occur between the investors and the investors, because one investor, which we say that the first investor dealing with another investor to sell the shares of that corporation which is purchased by the first investors. Primary market is beneficial for corporations. It means that it is beneficial for a corporation because a corporation wants to raise his funds. A corporation need money, so the corporation sell his shares and converts his asset into cash. So the primary market is beneficial for corporation because in primary market the corporation sell his shares to convert it in liquidity and cash, while and secondary markets it beneficial for first investors. We say that first investor is a person who purchased the shares of a corporation for the first time. So and secondary market is beneficial for first investor, in which the investor want to convert his share into cash, which is purchased by him from corporation. So in secondary market, the investor who purchase shares, who purchase securities, equity, debts, bonds of a corporations, then when he want to sell it and convert these shares into cash, they go to secondary market, and by this way they convert these shares into cash. So it is beneficial for the first investors. The example of primary market is in IPOs. IPOs stand for initial public offerings. And IPOs, when a new company is established, when they have no money, when they have no funds, they want to increase the shareholder for the corporations. So for increasing the shareholder for corporation and rising the funds for corporations, they issue IPOs, they issue initial public offering, they issue their shares for the first time in a primary markets to increase the number of shareholders for their corporations, to rise their capital formations. While the secondary markets example is National Stock Exchange. In National Stock Exchange, we have different kinds of securities of different corporations, which is already exist for sellings. If you want to purchase the shares of a corporation, just like if you want to purchase the shares of a Honda companies, so the shares of a Honda companies is already exist in secondary market, which is purchased by an investor, and that investor want to sell it, and they place it on National Stock Exchange for sellings. Or we, in other words, in simple words, in daily life example, we can say that the example of primary market is just like my camera. I purchase it from a company, which is my first purchase. When I purchase it from a company, this is the first time I purchase it. This is the first securities, this is the first resources which I purchase from a company. So this is these dealings between me and a corporation. This is primary market. When I feel the needs of money and I want to sell my camera to other person, to other investors, or the person who need camera, then when I sell it to another person, then we will participate in secondary market, because the camera which I purchase from a corporation is already with me. So when I sell it to another person, this is done in a second ways. This will be done for the second times. So between me and another parties to whom I will sell my camera is on secondary market, and when I purchase it from a companies for the first times, this will be in primary market. Now let's explain these words by diagram, how we can explain it, how we can show to by visual way to the difference between primary and secondary markets. So in diagram we have three parties. The first one is corporation, the other one is investor A, and the third party we give name investor B. When a corporation want to sell his new securities to investor A for the first time, so this dealing is occur for the first time between investor A and a corporation. The dealing is occur for first times of securities. This security is sold for the first time to by a corporation to investor A. So this is actually done in primary market. When the investor A need money and he want to sell his bonds, he want to sell these shares of a corporation to another parties, to another trader, to another investors, then they will sell it to investor B. And this investor A will sell to investor B, they will participate in secondary market, because these securities, these shares is issues for the second times. The first times they issue, the corporation issue to investor A, and by second times the investor A issue it to investor B. So this will be done in secondary market, and while corporation between the dealing between corporation and investor is done on primary market, because the shares is issued for the first times and here the share is issued for the second times. So this is all about today's lecture, that what is the difference between primary market and secondary market. If you have any question regarding today's lecture, feel free ask in the comment section, and if you don't subscribe our channel, please subscribe, like and share it with your friends. So take care of yourself and stay with us. Wassalam, Pakistan Zindabad.